this is Tom Cloud with my bi-monthly precious metals market update. Let's jump right in. The main question and comments, and I really appreciate the nice comments about the confidence diversification statement I made in there, but it makes perfect sense. And yet we probably have 60 or 80 financial advisors that send their clients to us for gold and silver when they want physical metals. And it was amazing if you think about it. As you put your money into anything, you want to feel confident that what you're doing might win. And right now, there is none. Who in the world in the right mind would buy a bond right now? Now, eventually, when the bond market crashes, you get down there, you may look for opportunities. But the Bloomberg Total Return Bond Index is down 20% with the worst quarter yet to come. So you just look at it and say, I'm not confident that that's a good place for my money. You look at stocks. Look what happened yesterday. Stock market crashed over 4% in one day. It's not time to have money in equities except some that you want to buy or a company, but the overall market is not a good place to be in the environment that we're currently in. So as you put money in the stock market, you're taking a risk and you've got to be confident, which I'll show you in a minute. Some of the top people that we've followed over the years are telling you to take cover, basically. And after yesterday, I think more people believe it. But then you look at something like what's going on in Japan, and in March, gold had gone up in the yen and the dollar the same amount. And since then, we've seen gold come down in US dollars and way up in yen. So people in Japan are making a lot of money on gold. But everything is setting up for the big one. That's when the US gets involved. That's when the US dollar starts going down, we've talked about many times. That's where when every 1% the dollar goes down, gold will go up 3%, where currently it's only been gold down 1% for each 1% up for the dollar. But when it turns, history shows us that it's going to be triple, and it'll send it back. Just think, back in March, gold got up to 2,060. As I record this, it's 1705. How many of you just 5 months ago, 6 months ago, if I'd have told you could buy 6 months out gold cheaper than $360, cheaper per ounce than you can today, we'd have had people lined up everywhere wanting to buy, but nobody knew that it would come back down. But my point is, do you think it's going back to at least 2060? Certainly I do. I think it's going to take that out in not the too distant future. I mean, it could take 6, 8 months. It could take 3 months. But people will get on the gold train, especially as the debt crisis intensifies over the next few months. So once again, the comment, confidence, diversification has just been a great help to me talking to money managers and just what they feel good about and what they don't, and their customers getting on the sidelines before they lose anything else. And the big move I'm going to show you is all three of these experts think much worse rest of the year. Let's start with our buddy Ray Dalio, the manager of Bridgewater, the largest hedge fund in the world. They've been on 60 Minutes every year. We've talked about them every year in January for years. And even when he just says bad things about gold, we put it out there. But now he is saying, he just predicted on the 27th of August that the stock market would go down 20 to 25% by the end of the year. It went down 4% yesterday. So it's got a long way to go. And when you ask Ray, why is that? He says that the Fed's aggressive rate hikes plus a dark shadow over the American stock and bond market. He says further, cash is trash. Cash is trash. Now remember in January, he said he had a low percentage in stocks And back then he said gold was going to have a great year. It's not doing a great year yet, but there's time left. So if he says money and cash is trash, then he says money in savings account are not safe. FDIC has a very small percentage assets to cover what they have insured. And the same thing with all those insurance. They don't have the assets to cover a fraction of what's out there. And we've got laws out there about bailing in where the bank can legally take your money and you become the one and you're the lender and they pay you back if they can. But the G7 will never again come in and cover a banking crisis. You better be darn sure where your cash reserves are, that you're happy. And U.S. Treasuries might be a better answer of what's out there, but it's not a good answer. Number two, Scott Minyard from Guggenheim, highly, highly respected. He says the stock market, this was last week, will fall 20% by mid-October. He cites the connections between the price-earning ratios and inflation. Says inflation will continue to increase into double digits. Then lastly, Michael Cayed, C-A-Y-E-D, I've had him, I've mentioned him probably 5 times in the last couple of years. He says that the U.S. debt crisis this fall into the winter, unless inflation gets under control. Now, why is that? Because interest rates, remember, they go up on the federal budget of $32 trillion. If every time the rate just goes up 2%, and we're going to get probably 4 or 5%, it's an increase of over $600 billion in interest. $600 billion. That's 0.6 trillion in interest added just with the recent hikes by the Federal Reserve. So you've got to realize they're going to keep hiking. It's going to affect all interest rates, home mortgages, boat loans, car loans, everything. It's going to be much more expensive, and the debt is going to run sky high. Consumer debt is out of sight. But the thing that Michael says that really opens your eyes is we've got a terrible budget deficit that there is responsibility to us as an American citizen and taxpayer. We're in that, and that's 32 trillion. And we know where that is. It's going up 1 to 2 trillion every year, and now it's going to be over 2 trillion this year. But what you don't know about is where does the money come from when we give the Ukraine 35 billion, 17 billion, 30 billion. We pay off a tax for, student loans, 1 trillion. These are called unfunded liabilities. We've got a liability because they've been created. We ain't put a tag on yet who it's tied to that owes it. We've been hearing about the middle class is definitely going to be the one that suffers from it. Middle class gets just enough, little tidbits to keep them from rioting, or getting out of control if they really knew what's going on. $170 trillion unfunded. And now we're seeing for the first time Social Security is in trouble. We've always heard it's in trouble in 20 years, but nobody told you it's in trouble in less than 10 years because when they give me a raise on my Social Security and it's 8 or 10% as it's inflation adjusted, just think what this is going to do to all the money that's in there that's at work to make money, to pay me and every other person getting Social Security. It cuts the life of the Social Security way down. And then we're looking at a few years, people 60 years or younger might as well forget it for now. They better start trying to figure out a different retirement because it ain't going to be there. Go do your math and you'll see. So today, what I wanted to get into, I brought you the experts, what they're saying. All three of them think at least 20%, and there's 4% yesterday, at least 20% more. There's going to be coming down. There's going to be a crisis, an interest rate crisis coming that you can easily see. You can go to usdebtclock.org, usdebtclock.org and learn a little bit more. But the bottom line is you need gold, you need silver, you need precious metals. I can't think of any place. I'm scared of sitting them there in banking accounts. You know, somebody said, well, I've got a great 3% CD for 2 years. And I said, you asked me, I wouldn't do it, because I think the worst part is going to come between now and the election in 2024, because they're going to keep creating money and buying as many votes as they can to stay in power. So you just got to think it's your money, you're responsible for it. Some money manager can't tell you that they should be telling you what I'm telling you, and hopefully they have. Hopefully your money manager has been telling you what I'm telling you right now. So with that, we're working on some diagrams I'll have out soon that'll be on our website at cloudhardassets.com. We're having it redone. Doesn't look so great right now, but we're got some good stuff coming on in the next 2 weeks. Should be fully functional with that. So if you want to talk to us about gold or silver, you can call us 800-247-2812. Once again, 800-247-2812. And Dan or Catherine or I can help you. And if you want to talk about icecap.diamonds, they'll send me the number. I'll be happy to talk to you. I am so excited about what, but before you call, check icecap.diamonds. Very exciting project I'm involved with. So with that, we'll look forward to seeing you again in a couple of weeks. With this bi-monthly precious metals market update, this is Tom Cloud signing out.